According to the bank, its prediction of even softer inflation is reflective of stable global oil prices and a firmer rand, which will translate into lower petrol prices. Mandisa Zavala, the head of asset allocation at Alex Forbes, says softer annual inflation may not necessarily be felt immediately, this as food inflation remains elevated. In November, food inflation quickened to 9% from 8.8% the previous month. The product prices underpinning this increase were mainly milk, eggs, cheese, fruit and vegetables, and sugar and sweets, as well as desserts. Nedbank and Agricultural Chamber of Business both expect food prices to begin to ease in the coming months as the impact of the temporary supply shocks in the poultry industry begin to fade.
It's coming at a huge relief, but when you do drill down into the underlying inflation drivers, what you do see is that it may not necessarily be felt within the consumer or the consumer experience rather, because we look at inflation as a huge basket and overarching economic thing, but when you drill down you do see that there are still some sticky things like meat definitely is still kind of remaining on the upper trend, but we did get some relief from vegetables coming down, bread coming down. So I think overall from the consumer basket, it's coming as an outright relief, but in certain areas.
There's further expectation that the Reserve Bank will start easing interest rates next year. However, analysts are divided on when exactly the cuts are likely to take place. Nedbank predicts cuts from May onwards, while Zavala sees cuts only in the third quarter.
That's on the back of also assuming that globally you're also starting to see some cuts on some of the bigger economies like the US and the UK and Europe. And I think, you know, there are definitely some underlying sticky trends towards keeping rates higher for longer. I think we spoke about the fact that rates have only been this high, a couple of years ago. And I think it is important to note that this is a global trend as well. This higher for longer is a global trend. So yes, this is good because we are going to start to see a bit of softness coming in, which could likely mean that.
Meanwhile, more data from Stats SA shows that retail sales declined sharply by 2.5% in October relative to October last year. The decrease was driven by general dealers, hardware, paint and glass retailers, as well as other retailers. The latest figure is a sharp drop on retail sales recorded up 1% in September on an annual basis and comes ahead of the November data in which retailers discounted products for the whole month for Black Friday. Diabo Seto, SABC News, Johannesburg.